Good morning, everybody, and welcome. It is June 18th, and it's Friday, 9:45 Eastern Standard Time. My name is Michael Mendillo, and I'm president of First Service Residential, and we welcome all of our listeners to this week's historic 60th webinar that we have been hosting since the pandemic, and also a happy Juneteenth to everyone. And uncovering the mysteries of audits is our topic. While that might not sound exciting to a lot of you, it is so crucial and important to our communities that audits take place and the process of it. And it's just not about the auditor, but it is about the process that builds up to it. We are happy to have you join us this week. We do record these, so we do have an opportunity to get them out to some of our, I'd say, loyal listeners that sometimes can't make it due to conflicts. So we do get them out. We do have listeners from all over the United States that dial into this, which we are pleased and appreciative of the loyalty of the attendees. And we have community leaders of all types. So we have board members and committee members that join us, as well as people in the management field and the professionals in the industry. We do like to make sure that our topics hit on areas that cover if you are in a homeowners association, detached or attached type of home, condo, a sited condo, large scale, heavily amenitized communities, lifestyle type communities, active adults, as well as multi-generational and mid-rises and high-rises. So we do touch on all of these areas. We are proud that we have our subject matter experts always pretty much from the First Service Residential family members that participate in taking each of the topics. We pull our topics from we see what's trending across the country, and we try to find things that we know may be seasonal or may it be certain things that are trending during the time, like we did during the beginning parts of the pandemic, which it was very pandemic-centric, if you will. And we try to do that to help and pass these nuggets along. We encourage you during the presentation, jot down notes. It might be refreshers, some new nuggets to share with your board members, fellow board members in your communities. If you have any questions during this, there is an area where you can shoot us an email during it. And at the end, we take a little time and have the panel answer questions that come in, which we usually have some very good and robust questions. If we can't get to all of them, we will email you after or next week. And a big weekend coming up as well. It's Father's Day, so a happy Father's Day to all the fathers out there living and in the past. A happy Father's Day to all. And with that, I am proud to pass it on. Again, our topic today is uncovering the mysteries of audits. And Keith Emanuel is going to take us through the first portion of this agenda. So Keith, I'm happy to pass it over to you.
Thanks, Michael. Keith Emanuel. I'm a regional director out of Silver Spring, Maryland. I've been with First Service Residential since 2018, and I've been in property management since 2006, so like 15 or 16 years now. It's a genuine pleasure to work for First Service Residential and an extreme pleasure to work with the great group of people that I get to work with on a daily basis. All right, let's get to it. The purpose and the process of an audit. What is the obligation to do an audit? One of the main obligations of any HOA or condo association is to ensure the fiscal health of the community. That's important. Ensure the fiscal health of the community. This involves doing a review of monthly financial statements and understanding what is reflected in those numbers, like incoming and outgoing payments, insurance payments, contracts, reserve expenditures, and homeowner account balances. Most association board members don't have the expertise required to fully understand what these figures communicate. That's why it's very important to get an association done on audit done on a regular basis. So then, what procedures are used by the auditor? In other words, what is involved in doing a physical audit for an association? Well, it's not quite as painful as an IRS audit of an individual, but there are similarities. A financial audit is when a CPA scrutinizes the association's overall financial health. This includes a deep dive into the association's financial records. The CPA will request a confirmation of the bank balance from each bank and confirm the number of receivables with homeowners that owe money. They will consult with the association's creditors and debtors to reconcile the amounts owed by the association and vice versa. The CPA will go as far as to analyze the association's records, their resolutions, and then their meeting minutes. They will also speak to contractors to ensure that there are no inconsistencies between what's reflected in the financial records and their own account. An audit also requires a review of financial forecasts, financial statements, internal controls, and law compliance. So what is the requirement of the association to do an audit? Good question. Glad you asked. Should an association do an annual audit? In most cases, the bylaws of the association should state how often they should conduct an audit. However, if the bylaws don't provide any guidance on the matter, check with your state law. Most states require that an association at least perform a yearly review, if not a yearly audit. Besides the obligations that I just described, what are some other reasons to have an audit? I asked this question to one of my board presidents, who happens to be a retired CPA, who happened to also do audits for a living. He told me that it gives him and his board, but mostly him, an extreme sense of comfort that their $2.5 million budget is being handled correctly and without fraud. In other words, it helps them sleep at night. Here's some other reasons to have an association audit. When an association receives huge sums of money from, say, an insurance payout or a construction defect settlement, this can be unexpected or unbudgeted income and will be reflected as such on the financial statements. It is important that this additional income be reported to the community and confirmed by an outside source. When the board or CPA spots irregular reserve or replacement fund activity, a few examples of situations that would qualify here include when the association's reserve budget is not meeting expectations, or when the association is underfunded, or during large reserve projects. Typically, the largest expenses that will show up on a budget can be those reserve expenses, and they need to be investigated. Next, when the association switches management companies and wants to ensure a smooth transition, typically funds are moved between banks and invoices are now being prepared and approved by a new company, and these things should all be investigated by an auditor to make sure they are staying consistent and also not double processing. When there's suspicion of embezzlement or fraud, this goes without saying, the best way to prevent this is by having all the records examined. When the association is experiencing political infighting between board members, this can create havoc and take people's minds off of the financial responsibilities of the board. And a board takeover, where the previous board is forced to step down, same thing. The new board may not be completely aware of certain contracts in place and may have to do a lot of work to get caught up on all the prior board's history. When an association takes over from the developer, this is important because now all the financial decisions will be made by the new board that now consists of all homeowners. When the association is going through financial hardships or complications, it might be worth conducting an audit during such times to make sure that proper records are still being maintained. And the large assessment. It's highly recommended that associations that have an annual assessment of $1 million or more conduct an annual audit. What is it that the auditors concentrate most on when they're doing these? Well, top of the line is bank reconciliations, not budget, but bank reconciliations are very important. Auditors Usually start with bank recs to ensure that the association bank account balances are the same as the financial statements. And then there's the budget. This involves a comparison between the HOA's budget and its revenue and expenses. The CPA will look out for miscoded entries and make sure that the numbers balance each other out. Cash disbursements and receipts. This is to ensure that incoming funds and outgoing funds are accounted for. This includes things like resident assessment for the former and petty cash or bills for the latter. Insurance. The association should have insurance coverage for the board member liability, for general liability, property and casualty, as well as fidelity bond coverage. Vendor contracts. It's important to ensure that the figures reflected for long-standing contracts match with the corresponding payments. And then reserves. The association's reserve account should be properly funded according to the reserve study. So far, that's a lot of work the auditors have done. So what types of results might they dig up? Small mistakes accumulate over time and lead to costly damage due to lack of proper oversight. So some of the most common issues that are discovered through an audit include misuse of petty cash. That's a major one. Proper procedures for the use of petty cash include having valid receipts for every cash transaction and having the petty cash drawer examined on a regular basis by management or someone of authority. Over budget expenses that are approved without proper review. The board should be aware of large expenses, particularly ones that put them over budget in a certain category. Overpaying for outdated contracts that should have been negotiated years ago. All contracts should be reviewed on a regular basis. Once again, insurance coverage. Now we're checking if it's sufficient. For instance, an association might be covered for 100 homes, even though it has grown to 300 homes, and maybe they added recreational areas. Is the insurance coverage enough to take into consideration increasing costs and growing inflation? And then embezzlement. Embezzlement can occur due to lack of bank reconciliations. Another clue of embezzlement is income line items that fall well under budget. The board should also be very aware of all the vendors being used and check them out and check their background. So now for the next part, the audit package, I'm happy to bring on Ariel Hansford, our Vice President of DC Metro High Rise.
Ariel, are you on mute?
Oh, I'm so sorry about that. Good morning, everyone. Happy Friday. So my name is Ariel Hansford, and I joined First Service in 2018. It has been a pleasure, and I'm so excited to be here this morning. I've been in the community association industry for 17 years. And I specialize in the management of high-rise and mid-rise communities. So I realize that the draft audit package can seem overwhelming. We look at this with a lot of clients. There's a ton of information and technical language that's included, but it's actually made up of several reports and letters. So this morning I'll provide a breakdown of the various reports and information that may be included in the audit package, and try to give a brief overview of those items and their purpose. So let's try to take bite-size, make it into bite-size so it's more digestible. The first 4 items that I'll go over make up the final audit that's issued to the association, which is available to the owners and potential owners. So it's one of the disclosures in your resale packet when someone's purchasing. The auditor will also provide other letters and communications in the draft report that may be restricted to just the board and management. Right, so let's jump in. First up is the independent auditor's report, which describes the financial statements prepared and the time frame covered. The report contains information regarding the board's responsibility for the financial statements, the auditor's responsibility, as well as the auditor's findings and opinion on the financial statement. The auditor's responsibility is to express an opinion as to whether or not the financial statements have been presented in accordance with the generally accepted accounting principles and that they're free of all material misstatements. So I think in this letter, and maybe in the entire audit, the auditor's opinion is probably the most important part of it, but it's also just a tiny blurb. Next is the financial statements, which consist of a balance sheet, a statement of income, a statement of members' equity, and a statement of cash flows. Let me quickly touch on two of these. The balance sheet is a snapshot showing all of the assets and liabilities on the last day of the association's fiscal year. So if you have a traditional fiscal year, right, that's 12/31, but perhaps your fiscal year starts on August 1, so July 31 would be the end of the fiscal year. The income statement shows the income and expense activity for the entire year. It includes all of the revenues and expenses, as well as the allocations to each of the different funds. And that income statement can provide useful information regarding the association's operating performance during that year being audited. The notes to the financial statement, or footnotes, provide information about the makeup of the association. So, for example, 451 units, two 12-story buildings with a clubhouse, pool, and tennis court. So it says characteristics. Then the significant accounting policies used to account for the financial activity. And then information about specific line items or general ledger items in the statement. It will provide information on the reserves, investment policies, tax filing status, debts. It will disclose if there's any type of lawsuit pending, and if there's a pending loan that needs to be taken out. The supplementary information on future major repair and replacements, boy, that's a mouthful, presents information about the most recent replacement reserve study and replacement fund as supplemental information to the financial statements. So generally, it provides a list of those common property components, the estimated useful life, and the replacement cost of each of those components. It'll also provide a balance of the replacement fund and the recommended future contributions. That can often be used as folks are looking at the audit to determine if you know, how healthy that the association's reserve fund is. All right. So, as I mentioned earlier, the auditor may issue other letters and communications with the draft report. Most are restricted to the board and management and are not included in that final audit. The representation letter is a letter which is prepared by the auditor from the association's board and management to the auditor, confirming that, to the best of the knowledge and belief, all information that was provided or disclosed to the auditor, and the auditor is required to obtain a signed representation letter before they can finalize the audit. So in addition to the board having to approve the audit, this document does have to be signed by both parties and returned. Then there's the management letter, which communicates the auditor's comments and recommendations about the association's financial statements and records. Comments may include areas where operational improvements can be made, details about pending financial items, and certain internal control matters. The management letter can be looked at as a to-do list of items that need to be followed up on as a result of the audit. So next we have the communication with those charged with governance under the AUC 260. So the AUC 260 letter describes the audit process and lets the board know if there were any disagreements with management, any difficulties in conducting the audit, significant disclosures to the financial statements, or significant estimates in the statements, or if material adjustments were proposed to the association statements. They may issue the communication of significant deficiencies or material weakness under AUC 265. So in accordance with auditing standards, the auditor is only required to issue this letter if control deficiencies that rise to a level of material weakness or significant deficiencies are found as they're doing the audit. So if this letter is issued, the board should review it in detail along with the management company and discuss ways to implement changes to avoid future findings and improve control procedures. Lastly, the auditor will provide the adjusted trial balance and adjusting journal entries. So these are the proposed audit adjustments for the period under the audit. And the management company's accountant will record these adjusting journal entries once the draft audit has been approved. And this will ensure the association's financial statements are up to date and accurate. So I hope I've helped simplify some of this for you. And now it is my pleasure to turn this over to my good colleague, Ray Weber.
Yeah, thank you very much, Ariel. Great job, Ariel and Keith. I learned a lot about audits myself from you guys, and I really appreciate that. And my name is Raymond Weber. I'm the Executive Director of Client Accounting here at First Service Residential. I've been with First Service for 12 years now, and before that, I was in other industries. This is my first exposure to property management and property management accounting. You know, what I found that is so unique in this industry is the role of board members, right? You don't see this in other industries where board members do so much, are responsible for so much, are paid so little, right? If we triple your salary tomorrow, it's still going to be zero. But you're responsible for things where you're not the subject matter expert necessarily. I know we do have accountants who are on boards, and we have non-accountants who are on boards, and you know, people who are experts in other areas, engineers, you know, helpful with, you know, building stuff and things like that. But for the most part, you may not be the expert in the area that you're looking at and you're responsible for. And that's why these webinars are so great, and really thank Eileen for doing so many of these, and really helps to give you an idea of, you know, what you need to know, and helps, you know, as a management company, we help you through getting to know what you need to know. As we said, today's subject is audits. I know Michael said it's not very exciting. I think it is exciting, but I'm an accountant, so you may not want to go by me. But the key thing we want to know here is, what do we learn, right? The audit's done. It's in the books. It's complete. You've had your discussion. What do you do now, right? How do you go forward? What do you do with this new information that you have in front of you, right? Now, the first thing, you want to make sure you did go over the audit with the auditor. You want to make sure you understand everything that's in the audit. I'm an accountant, and I'll look at audits and say, what are they trying to do here? What are they trying to accomplish? I don't know. Sometimes we need to ask the auditor themselves what their goal is and why they may do a certain journal entry or make a certain recommendation, and you want to do that too. You're paying the auditor, right? They're a vendor of yours. They owe you an explanation, and all auditors will sit there and go over with you. It's what you're paying for, and just to make sure you have you understand what's in the audit and what you're looking at, right? There's a lot of information in there, and you want to be sure you know what it all means. Right. The next thing, are there any material changes, right, in the audit? There's always going to be adjusting entries in the audit because, you know, assuming it's a December fiscal year, I know not all fiscal years end in December, so you may have to adjust the years if yours is not December. But assuming it's December, so your financials for your last month of the year are done in January, probably mid to late January, and they're done with the information we have in mid to late January, right? So then the auditor comes in maybe a month or two, or sometimes even more after that. You have a lot more information, all right? Things happen after the December financials were published in mid to late January that can affect the prior year. You can have an invoice come in that you didn't even know about, that was uncovered or just came in late, and then you understand that that's just something that has to go back to 2019. You could have revenue that come in. You could have different allocations that you become aware of, you know, if it's the master sub-association, things like that. There's more information that come in after the December financials are done. So there's always going to be adjusting journal entries, right? And you want to make sure if they are entries, do they change anything, right? Do they result in an expense category that's now well over budget? And I use the example that, you know, the auditor can go in and see that, you know, building maintenance and exterminating, right? Maybe a bunch of exterminating invoices were coded to building maintenance. Seem like a good place to be coded, right? It is maintaining the building. And both building maintenance and exterminating were right on budget at the end of the fiscal year, so everything looked copacetic, everything looked good to go. But it turns out, after he's adjusting journal entries, the building maintenance is now way under budget for the year, and exterminating is now way over budget for the year. So the question is why? Did we just not budget enough for exterminating? Did something happen that we just didn't know about in exterminating? Did something need to be exterminated, or something specific need to happen? And, you know, maybe it's a one-off thing where we don't need to adjust for future years, or maybe we do need to adjust for future years, right? Maybe we need to take this information and use it going forward to figure out, you know, how do we make sure we did our future budgets for exterminating are correct? Or did we just pay too much? Maybe we need to speak to the vendor. Why did we spend so much on exterminating? Maybe we didn't need to spend so much. So it's really about taking a look at that and going over it and just seeing what may have changed. Some things may change by a small amount, which means you don't necessarily have to look at it or make any changes going forward. If something does change by a big amount, you want to take a look at it, right? And you want to see why, and you want to, more importantly, see what to do about it going forward so it doesn't happen in future years. Maybe you get the budget in the summer, you're just preparing your budget for the next year. Now you can take this information and factor it into that budget, right? Were there any material changes to fund equity? Any expenses that were originally classified as operating expenses that were now looked at by the auditor, and the auditor decided they should be a reserve expense, or vice versa, right? Maybe something was coded to reserve expense. Turns out that they believe it should be an operating expense, right? This could result in a change to the equity in operating reserves or any fund that's being affected here that may need to be addressed going forward, right? If you thought you had X amount of dollars in your operating fund, and now it turns out you just move it from one pocket to another, now it's in your reserve fund, but maybe now you don't have enough in your operating fund, or vice versa. Maybe now you have more in your operating fund than you had before. So you want to take a look at that and factor it into your future decisions. So what adjustments need to be made going forward, right? One important thing, and Keith already touched on this, is were any internal control issues uncovered during the audit that need to be addressed, right? Keith already mentioned inappropriate petty cash, maybe debit card use, right? It doesn't mean that something was found that was stolen or any embezzlement. Maybe the auditor just found some opportunity for that could happen, and we want to make sure we address it and close any potential holes going forward. Are all vendors vetted and approved? Are we following our process for approving invoices? Or are we getting a bunch of things at 4:45 that says this check needs to be in the mail? We need to circumvent our approval process and get this out. If they don't get it tomorrow, something really bad is going to happen when they need to be paid, right? So we want to make sure we're following that, because the audit helps assure HOA members that all internal controls are in place, right? It gives the board member a sense of comfort that Keith talked about, and it allows you to say to your constituents that, yeah, we have had an independent auditor come in and look at this, and they determine that everything is okay, or they point out what we need to fix, and we did that. Now's a good time to take a look at your reserves equity to see how prepared you are, right? This could be a result of what we just talked about as far as maybe a change due to the audit, or maybe there was no change, but now is a good time to take a look, see what your equity is compared to cash. If you're not familiar with the terminology, equity is kind of like your net worth. If you think about yourself, right, what's your net worth? It's not what you have in the bank, right? It's what you own compared to what you owe, and what would be left over if everything was liquidated at that point. And you do need, on the reserve side, to compare that to cash, right? Because your cash should be in the same ballpark as the equity. If it's higher or lower, you have an interfund balance. Maybe operating owes the reserve fund some money, or vice versa. The audit's going to uncover that or confirm that. Maybe that's what we knew that it was. We want to wait till an audit to confirm that before we moved any money, because it could be a significant amount of money. You want to take a look and see, did we fund the budget, right? You budget for a certain amount of funds to move from operating to reserves every month to cover future reserve expenses. Did we do that? Was there a reason we couldn't do that? And if so, are we going to catch up to that? What was enough budgeted, right? Because as we mentioned, Ariel mentioned, reserve study is part of the audit package, right? And you want to take a look at your reserve study, because it's going to tell you how much it believes you should have in your reserve fund now, and it's going to tell you how much you should have in 3 years and 5 years. It's important that reserve study is up to date. We usually recommend getting a new one done every 2 to 3 years. It's an engineer, it's another vendor that comes in. You pick an engineer that comes in and looks at everything, looks at all your structures, and looks at gets a useful life and the approximate replacement value. so you know how much money you're going to need going forward, because you want to make sure you have enough for future years. Just looking at your reserves cash and seeing a big number, well, we have 800,000. Wow, that's a lot of money. Certainly sounds like a lot of money to me. And if a bunch of things break in the same year, it may turn out to not be a lot of money, right? So you can't just look and see a big number and say, wow, we're covered. We have this much money in reserves. Addressing surpluses and deficits, right? So the goal when you do a budget is zero-based, right? In an HOA, a CIRA, which is, where HOAs are part of, are not supposed to make a profit. We're not supposed to have a deficit either, right? You're supposed to be zero, and that's how you budget for the year. As the year goes along, things don't always happen that way, just like in your own house. Just like when I walked in a month ago to my kitchen, there was an inch of water, and my dogs were having a blast jumping around. They turned into 2 little water buffaloes, but all of a sudden our budget changed for the year. we had to move things around, and the same thing happens with homeowners associations, obviously, right? So when you see you have a surplus or a deficit, it's supposed to be addressed, right? If you have a deficit, you're supposed to make that up by getting more income, whether it's from the homeowners or any other way, or reduce expenses. If you have a surplus, you're not supposed to carry that. You're supposed to use that and dwindle that down by maybe billing the homeowners less, right? This is a good time to also, while you're going through a financial audit, also audit non-financial information. Excuse me. This is not part of your financial audit, but this is a time for you and your management team and employees necessary to take stock, right? Go over your SOPs. Go over, what you do as far as, maintenance on structures in your units. So when you have a reserve study, you make that useful life, right? Something doesn't bite the dust in 3 years that should have lasted 5 years. You want to make good time to go over your maintenance schedule and make sure everything is okay. Go over your vendors. Are we vetting the vendors? Are we getting the maximum value out of our vendors? Should we be looking at vendors and see if we should, if we can get a better price from different vendors? Should we put things out there? As I said, specifically for high rises, right? Look at your infrastructure. Is the regular maintenance being done? Are fire extinguishers where they need to be? All that kind of stuff. Are homeowners up to date in your system? Good time to take a look at your insurance coverage, which Keith already mentioned, right? Go over it. Use your management company as your expert to go over and what kind of insurance coverage you need. Do you need to? Is it time to go out and see if you can get better coverage or cheaper coverage, or just take a look at it? It's a good time to take stock of everything. Now that you're stopping to do your financial audit, it's a good time to stop and audit other things as well. Now, one important thing to know, again, as I talked about, so unique to this industry, is fiduciary responsibility of board of directors, right? As a board member, you have a fiduciary responsibility to understand the financial position of your association, right? You need to know. You need to act accordingly as well, based on results of the financials and the results of the audit. And the monthly financial reports can only cover so much, right? Only an HOA audit, an independent auditor, which is the key here, right? An auditor is not somebody that should be recommended by your management company. Now, we can give you options, right? Management company can say, hey, use these auditors. These are really good. But your management company shouldn't necessarily be picking an auditor for you, because it needs to be independent, right? It needs to be someone who comes in and independent of the board, independent of the management company, and comes in and certifies that the financial reports that you receive monthly actually reflect the true financial status of your association. And as Keith said, the biggest thing here, I think the biggest thing I've heard so far is a sense of comfort, right? The sense of comfort is, as a board member, you know that this is not, the financials aren't your financials, they're not your management company's financials. Once they're audited and the auditor gives an opinion that they are valid, they become the true financials for the association. And that's from me. I'm going to send it back to Michael Mendola.
Thank you, Ray, and thank you, Ariel and Keith. Terrific job. Again, a difficult topic because a lot of people tend to kind of lean away from, the details sometimes in these situations, but it's so important to have the knowledge of reaching out to the professionals that surround you at your community, and also the auditors themselves that have to be doing the real heavy lifting. But it's so important in dotting the I's and crossing the T's here. As they say, the devil's in the detail. And definitely when it comes to auditing and stuff, that really does resonate. So thank you very much for a great presentation. At this time, I'm going to pass it over to Eileen Jablonski, who's our Vice President of Communication at First Service Residential, who's going to facilitate the questions that were coming in during the presentation. And please feel free to jot us down your questions via email, and we are hoping to get to all of them, and our panel will be happy to try and answer and facilitate all of them. So with that, Eileen, I will pass it over to you.
Thank you, Michael, and good morning. Our first question goes to Ariel. Is there a separate report on financial controls?
So I'm not aware of a report that that discusses solely that. However, in the management report, and of course, as we mentioned in the A260 and A265 letters, it does discuss those those financial controls.
Excellent. Thank you, Ariel. Our next question goes to Keith. In real life, do the auditors first share their findings with the management company before giving them to the board?
Is that the question? Yes. The management company reviews the audit because they're the ones that are in control of all the financial reports, and so they want to make sure that what's being presented to the board of directors is accurate, at least on their end. And then it goes back to the board for review after both the management company and the auditor have reviewed it all.
Thank you. Next question goes to Ray. What if you do not agree with the reserve study? Can you make your own adjustments?
You can make your own adjustments if you want to, but you have to remember that the reserve study is done by professional engineers, and they come in and take a look at it. You can disagree with it if you like and make adjustments accordingly, but you are disagreeing with professionals who know what they're doing and do this for a living and look at it. So you want to make sure, maybe you want to talk to them about it, right? If not just necessarily make an adjustment, maybe ask them why. And if you disagree with something, tell them why you disagree with it, so you can really get a consensus opinion on something, as opposed to just going in and making a change that, could affect you going forward.
Thank you, Ray. Ray, the next question is also for you. It's a question on audit timing. Board knows they have known financial issues. It's the middle of the year and the board is working through the issues. Is it best to initiate an audit now or at a later time in the year when some of the known issues are addressed by the board?
Well, that's a good question. There's a due date for audits, right? You're usually, every state has a different statutes and laws, but most often the audit is actually also attached to a tax return, right, which is due at a certain time. And there's exceptions to this, but it's usually due March 15th, and often the auditor will put in for a 6-month extension. So while you should make sure you go over all your financial issues and discuss them with the auditor, you need to also be cognizant that there's a due date, and it's something that can't stretch on forever because it's something that should be addressed. And also, we're talking about known financial issues in the following year that pertain to the prior year. So hopefully it's something that we can get wrapped up as soon as possible, so the auditors can come in and do what they need to do. And maybe the audit needs to be part of the known financial issues and help address them.
Excellent, thank you. Keith, question for you. How do we find a qualified auditor?
So an auditor is just like a contractor. So what we would do as managers is we would go out and we would find you 3 or 4 different contractors, get proposals from them. But one of the advantages that we have, at least working in First Service, is we work with many different auditors. And when we present these proposals to you, we can kind of give you guidance on how each auditor works, and maybe you have a more complex financial situation, so we would want to recommend a auditor that is much more detailed and much more thorough. Of course, they would probably charge more because they're more thorough, or another HOA or condo association that doesn't have a real complex financial situation going on, in which case we could present to you a lower end contractor that's less expensive, but maybe not quite as thorough.
Excellent. Thank you so much. Our last question is going to go out to Ariel. Can a study of past audits provide an assessment of the financial health of the association? And if so, what items are of prime importance?
So I think, yes, I think it really paints a picture of the progress of the association. Some of the key items to look for are the members' equity. I know Ray went into that. That's how much net revenue is there. That's particularly important. If there's a financial emergency, major snowstorm or blizzard that that there's these huge expenses, and it blows out the budget, that you have this extra money to fall back on, so that you're not depleting from the reserves. Again, it looks at the reserves funding and ensuring that contributions are being made as recommended, and that the useful life is being looked at. And it also looks at the delinquency rate, and that also can show the health of the association, and making sure that those are coming in. Generally, anything under 3% is good. I hope that was helpful.
Okay, well, thank you very much, Ariel and Eileen, for facilitating. Again, I want to thank all of our subject matter experts today from First Service Residential, Keith and Ray and Ariel, for a great presentation, and mostly thank all of you for continuing your support on and your loyalty to attend these, and to be open-minded as leaders, and to continue to want to learn. So all of us as leaders, every day has to be an opportunity to learn. And again, a happy Juneteenth for all, and a very, very happy Father's Day to all the dads. You continue to cast a shadow among more than you probably realize. So continue to do a terrific job in that, and enjoy your weekend and your families. And we look forward to seeing you all again within 2 weeks. Have a terrific day. Thank you, everybody.